Hello, everybody. Welcome back. Welcome back, everyone. Great to be here with you. My name is Ed Ponzi. So wonderful to be with you here today. It is Thursday, October 2nd in the evening. We've already had Mario Draghi-related volatility today. We've had huge volatility in the stock market today. And we get non-farm payrolls in the morning. So there's just never a dull moment around here. So anyway, so it's great to be here. And let's start talking about it, because I got questions that came in about the New Zealand yen, because so I want to deal with the questions first, because we got our entry on New Zealand yen today. I've been saying to you guys, I think I'm going to guess here and say, like, for the last two sessions, I've been talking about shorting this at 86. That's what I think has happened here anyway. So that's what I think. I'm not sure exactly when I started talking about it, but we finally popped up to 86. I mean, it's a textbook setup, right? We talked about this Buddha top, this triple top here, and we said if that 86 breaks, well, it had already broken. So if it comes back to 86, and it gives you that second chance. And now listen, if you folks have taken, the stock course, the stock trading course, then you know about second chance entries. And this is that, this was a second chance entry. 86 is clearly the support level. We bounce off of 86, we bounce off of 86 again, and then it breaks through. We do not catch the breakdown, but it gives us what? It gives us a second chance. And here's the second chance. It comes up. And by the way, folks, that's why you don't chase after them. I think it would have been very easy to look at this chart and say, oh my gosh, I'm missing out. I missed the breakdown. I'll short it down here. What's the next thing that happens right after you chase it? It comes back up to the entry point. So really, you got to take the attitude that, look, I want it at my price, or I don't want it at all. That's really the healthy attitude of a trader, to say, I'm not going to chase after this thing due to fear of missing out, because the truth is there are an infinite number of opportunities available to you. So chasing after one of them, just because it appears to be a very good idea, you could be chasing after something you could be chasing after a losing trade. In fact, the act of chasing means that you're not entering at the ideal point, which is going to throw off your risk reward, and it's going to increase the odds that you're getting into a bad trade. So just don't do it. Don't chase after them, right? There's always another one coming. But in this case, it cooperated. This came up to, I believe, 86.08, and we just got it, and it came down. Now, the funny thing is, if I show you this on the intraday chart, I'm going to walk you through the full setup here. Watch what happens. It's almost as if, look at that, just straight up, and it hits 86, hits our entry point, and it already hits our first target that quickly. I mean, so quick it would make your head spin. And I realize I didn't even get a chance to give you guys targets, but that's a pretty substantial target. I'm going to get into in just a minute why that was a target. But we have another target still, and frankly, even if it had not hit that target, it would still make a good target. So, we'll act as if it didn't hit the target if it makes you feel better, but we are short from 86. Target 1 is here. Now, when you look at this, right, when you look at this, I think if you look back here, why is this a good target? First of all, go back to the point in time where you enter. Make that the hard right edge of the chart. Okay, there's two things going on that make this a good target. One is there was prior support at 85.10. Bounces once, bounces twice. It could bounce again. Even here, it pulls back after the breakout, bounces off that area. And if you look at that area, so that's actually that was already a significant area beforehand. And so, you know, today, right, we're still October 2nd here, but technically for me this was last night. It goes up, and you know, we've been saying 86 forever, and what does it do? It goes up and it kisses 86 and it turns and runs the other way. Folks, you can't tell me that technical analysis doesn't work. You know, I get to hear that all the time from fundamental traders who think they know better. I'm a fundamental trader too. I don't feel the need to disparage fundamental analysis, yet it seems so many in the fundamental community want to disparage technical analysis. But the truth is, man, that worked like a charm. The way that came back up to 86. Just to refresh your memory, right? Look at that. That support line at 86 is just bounce, bounce. Those are big bounces too. This is in May. It bounces at 86. It goes almost up to 90. It bounces at 86. It goes up to 89. 300 pips, more than 300 pips. All right. So when that breaks, right, you can almost bet that someone was buying here thinking, wow, if I look back to the left, I can see there was a huge bounce here and a huge bounce here. But what were they ignoring? If they bought here at 86, what were they ignoring? Velocity. Look at the speed, right? This thing is coming down like a missile, okay? In this case, it kind of floats down. Ta-da. It's kind of floating like a feather. It's down, it's up, it's down, it's up, and it's down. It floats down like a feather, right? In this case, the same thing. It comes down hard here, but then it slows down. It floats down like a feather. It floats down like a feather. Here it just comes down like a piano pushed off the roof of the Empire State Building, just straight down. That tells you right there that it's likely to break, the way that it comes down. So I don't just pay attention to price. Don't just talk to me about price. Talk to me about how something arrives in a certain location. How does it get there? Right? This got there in a hurry, and that was your clue that it was going to break. And the fact that it bounced here and here is your clue that it was going to hit resistance at 86. So you don't have to be psychic. You know, you just have to understand your technical analysis and what it means in terms of putting yourself in the other person's shoes, right? You become the amateur psychologist, so to speak, right? You put yourself in someone else's shoes. Now, let's go back to the 60-minute here, because first of all, there were some delicate issues involved on picking stops and targets. And this is the entry right here, by the way. So I'm looking back and I'm thinking, maybe put the stop here above this high, the high of this descending triangle. And then I went, wait. If I put the stop above this high at 86.70 or so, right, then I'm going to be under this round number. If I push it a little bit higher, I can get above the round number of 87, and I can get above this just tiny little bit of resistance here. So I felt a little bit better protected, a little bit left out in the open. So from 86 to 87.10, that's 110 pips. All right. Whereas the target, well, we wanted to put the stop on the far side of a round number, 87.00. We wanted to put the first target on the near side of a round number. I mean, I could have gone down here, right? I could have gone down here with it, 84.70. But now you're aiming for the bottom of support, and you're also going on the far side of this round number. Instead, I decided to go just above that round number, and that worked out nicely. But if you didn't get it in, I think I would still stick with it. You know, I would still stick with it because shorting at 86 and currently at 85.57 is not a bad thing at all. What about, let's go daily here. What about an additional target? Well, I drew a Fibonacci. Right? You can see I drew a Fibonacci from the low point here. This was a major low that occurred in June of last year. And I drew it to the highest point that has occurred since then. And that's a major high point. That major high point occurs in April of this year. So we're going from June of last year to April of this year. And so it's a pretty big Fibonacci. And if you look at, if you zoom in here a little bit, there's a couple interesting things happening. This 84.15 is what I chose for the second target. The 84, first of all, huge round number right here, correct? And 84 is also the 61.8 fib of that Fibonacci that we just drew. So, in other words, there are three reasons, actually, why you want your target to be above 84 here, the second target. One is it's a huge round number. Two is the Fibonacci is almost exactly on the round number of, it's a 61.8 Fibonacci. That's two reasons why you need to be above 84. You want a third reason. Look at this here. It dips down to 84 and bounces. Okay, so it's actual support, it's Fibonacci support, and it's a round number. What more do you need? I say you don't need anything else. So 84 is going to be your second target on this one. And we can do a third target on this too, because we want to make it, look how big the candles are getting and look how volatile. And when I see the size of the candles, this is another reason why my stop was so far away, 110, and my target was 90 for the first target and 185 for the second target. We're going to put a third target in here too. But think big, right? Because look how big the candles are getting and look how volatile the markets are getting. Markets are getting extremely volatile. Here, let me show you. Right, if we go ATR on this, right? Look at the volatility just exploded here. Currently 93 pips a day. So my initial stop being 110 pips away is just a little bit more than a daily range. Could easily move that much, right? And it's also a reason why we should be generous with our targets. Now, by the way, someone had said, Ed, are you sure you want to do this ahead of non-farm payrolls? Well, it is New Zealand yen. And New Zealand yen means that there's no U.S. dollar involved, right? First and foremost. There's no U.S. dollar in this equation. So that aspect of it, we can just relax and not worry about that aspect of it. Because, yeah, could there be some volatility in New Zealand yen when non-farm payroll hits? Sure, absolutely could happen. But, that's not going to keep me up at night because I'm not trading across. Now, if this were Euro USD, I probably wouldn't enter it right ahead of non-farm payroll. If this contained any U.S. dollar, if this was any of the U.S. dollar currency pairs, I probably wouldn't enter it ahead of non-farm payroll because we all know it's a tremendously volatile event, and it's as I speak to you now, it's it's like 13 hours away. So but we do have our first target, which is a profit of 90. We have our second target, which is a profit of 185. The third target was kind of tough. I mean, should we go down here? Should we go all the way down here? No. I mean, the price bound, that's 81.50. The price bounced off of 81.50 and rocketed. So we could go here, right? We could. I think that's legit. But you know me, I tend to be a little bit kind of a play it safe guy sometimes. I'm looking at this and I'm thinking, okay, hell of a bounce out of 81.50 earlier. But you know what? I've got my 50% retracement just a little bit higher. and my 50% retracement is just above the round number of 82. So let's go. Now I have the 50% retracement at 82.17. I'm going to go a little bit above that. For the final target, we're going to go 82.25. And there you have it. Target 1, 85.10. Target 2, 84.15. Target 3, 82.25. And now we have a very good risk-reward setup also. Because that last target, you know, from 86 to 82.25, that's 375 pips. All right. 375 pips versus a 110 pip stop is certainly better than a 3-to-1 risk-reward ratio. Now, some people will say, but Ed, you're taking partial profits along the way, so it's not really 3-to-1. In that sense, it's correct, but you also have to understand, when I take profits along the way, I lower the stop. If I hit the first target, we move the stop to break even, and that means what? There's no longer any risk on the trade, so we can't even really discuss risk-reward at that point. There's nothing to say. All right, so anyway, so that's the New Zealand yen setup, and it's all perfectly legit. I mean, if you want to short them, if you're not in this trade, like let's say it comes up to 86, you know, overnight or something, the setup is still completely 100% intact. Okay. Now, someone was asking if they should use the elevator trade, and I see what you're saying, at 81.50, using the 81.50 down here as support, and using the 86 area as resistance. But generally, I wouldn't set that up as an elevator trade. If I were doing an elevator trade, right? If I were doing an elevator trade, I would say this is my support at 86, and resistance is up here at, say, call it 90, just to keep the numbers round, right? So 86 to 90 is 400 pips, and then I'm going to set it up like that. If I'm actually doing the elevator trade, I'm actually a buyer. I would actually be buying if I were doing the elevator trade. I would let the price come under 86 and then place an order above 86. If it's a 400 pip range, I'm going to go 40 above, so I'd be going long at 86.40 if that was my strategy. But you know what? You look at how hard this came down. It came down like a ton of bricks, and that's really what told you that you shouldn't be a buyer. Even if you do have a nice support level there, it's probably going to break. When they come down that fast, it means the sellers are getting out in a hurry. And I'll tell you what, too, fundamentally speaking, this trade also makes sense because the stock market's in trouble. And we know the yen tends to do well when the stock market is in trouble. So that tends to be a positive. Another thing would be the New Zealand dollar. The fundamentals of the New Zealand dollar are also not looking very good. For example, right? Well, I'm not going to bore you with the discussion of fundamentals, but there's been a lot, you know, it's a commodity currency, right? It's a commodity currency. What's happening to commodity prices right now? Look around you. What's happening to the price of everything's fallen. I mean, you know, the price of gold, is that going up or down? Right, that's going down, right? The price of oil, down. Man, that came through. That actually amazing comeback today, and a huge hammer on oil. But that actually got down close to 80. Excuse me, close to 88 today on oil. So, you know, in general, though, they've been weak. Look at corn. Corn's just a disgrace. I mean, it's amazing how this thing continues to fall, right? So, again, commodities in general, you know, this is true. Wheat has been weak. You know, I mean, commodities in general have just not been good. So commodity currencies are probably not going to be that great right now. And New Zealand is certainly a commodity currency. Japan is an anti-commodity currency, right? They have no commodities. Well, no natural commodity. If there's no oil, there's really no mining to speak of. Okay. Thanks for the heads up on the break lower on on New Zealand yen. I am in the trade now and in the money. Woohoo! Great job. Thank you for thank you, and hopefully you make a ton of money on this. I know anything can happen. As you taught me, Ed, please help me understand why the central bank guy in New Zealand would want to keep the intervention they made quiet. You know, that's a great question, because different central banks approach intervention differently. Okay? And so, for example, right, here's one way to approach it. Euro Swiss, we know that there's a line in the sand at 120 right here. And somebody's clearly buying at 120.50. Every time it gets close to within a pip or so of 120.50, it pops, right? And by the way, are we smiling today? You betcha. You betcha. We dumped half up here. It came back down just low enough to buy back our half, and now it's going up again. Life is good, man. I love this trade. So that's one way to do it. This central bank, the Swiss National Bank, made a very clear announcement. But when Japan intervenes, they give hints that they're going to intervene, so they jawbone, but they never talk about specific levels. And they never say, look out, okay, now we're going to do it. They just hit you with it. They just hit you with it like a ton of bricks. And then later on, they'll confirm whether or not they intervened or not. But it's obvious when it happens. So Japan has a very different way of going about this. Now, as far as Mr. Key, who's the Prime Minister of New Zealand, he used to be a currency trader. Why do they want to keep it quiet? I don't understand. If you intervene to weaken your currency, you help exports. Why do you not tell the word so they can help lift the weight? Again, they do not all have the same approach. And you're right, Key, and who's the Prime Minister, he's not really the head of the central bank, but the RBNZ, the central bank, did not say anything. We only found out after, a month later that, oh yeah, by the way, they intervened $561 million. So there's always different tactics. The worst tactic I ever saw by a central bank was in Russia about 5 years ago. About 5 years ago, I think the US dollar ruble was trading near 30, and the Russian central bank said, we will not let this rise past 34. Well, guess what happened? It immediately shot from 30 to 34. So by saying we will not let it rise past 34, what they were really saying is we're not going to intervene at 31, 32, and 33. So it took very little time for traders to smash it up to 34. And it did not have the desired effect. That was a dumb move, right? So not everyone plays the same strategy. And I would say, most of the interventions that I've witnessed, they don't give you a specific level the way the Swiss did. They just kind of spring it on you. Japan loves to do that. I mean, they'll warn you about it, they'll hint about it, to try to get the shorts out of the market, try to get people long. But when the time comes, they're not going to say anything. You're just going to see it happen. I'm going to tell you, man, it's a spectacular thing to watch. All right, so it's just a different tactic. I wouldn't worry about it too much. It's very different. The New Zealand's tactic is very different from Switzerland's tactic. Australia doesn't ever talk about intervention, or actually they only recently they've begun talking about it. Different countries just handle it completely differently. Okay, all right, and on we go. All right, so fantastic. By the way, so yeah, we're very happy with our Euro-Swiss trade. Euro-USD made a big move, not a huge move, but made a decent-sized move. Came up off the lows. Not a huge move, though, really. And I think the level that we're still watching on this one is the 10-day exponential moving average. Not right in front of non-farm, but yeah, if that gets up to the 10-day exponential, it becomes a much more attractive short. Draghi kind of laid out the plans. Nothing happened today in terms of interest rates with the ECB. Draghi did give more details. They're going to do covered bond purchases starting this month, and then starting next month, the program becomes wider. So they've put together their purchase program. And they are going to buy also, they're going to buy bad loans from Greece and Cyprus. So, junk loans that are probably not going to be repaid. They're just going to buy them up. And I guess that prevents, different companies perhaps from going under. So at any rate, that's the plan. Market, sold off the euro a little bit on this. I think what happened here is the euro was already pretty well smashed to pieces at this point. I mean, it was hammered, but good all the way down. And so I really wasn't surprised to see some people getting out, especially with non-farm coming tomorrow. It was a good time to say, look, if you've been short, and look, we were short. We made 350 pips, but I'm sure a lot of people made more than we did because this thing's been falling pretty much from 140 down to 125. And so someone's always going to make more than you. Most will make less. It's been my experience, but most will make less, but some will make more. And that's the way it's going to go. But the move is not that big or that impressive, in my opinion, on Euro USD. Everyone, of course, is focused on tomorrow's non-report, and take a look at the expectation: 215,000 jobs expected to be added. The participation rate is always a big bugaboo. Only 62.8% of the workforce participates in the labor force as of the last month, and so in other words, these are the people they don't count any longer, and there's a lot of them. All right, if you take 100 minus 62.8, it's going to give you 37.2% of the population does not work and is not considered part of the workforce. Some because they just have not been able to find jobs. If you can't find a job in 2 years, they just say, well, you're not looking, so they throw you in this pile. Okay. All right. So anyway, and we're going to get a whole bunch of market PMI, services PMI numbers on Friday too. So that always makes things interesting too. Okay, so that's enough currency talk for now. Now we're going to move on to stocks, and this is all very closely related. There's your 100-day moving average for the S&P 500. And a valiant comeback today, as this candle was red and bloody at one point, and it came all the way back up to basically close unchanged. It's a tiny bit green. But notice that you're still under that 100-day moving average. And this is problematic. Now, does the market have a psychological crutch that's getting kicked out from under it in terms of quantitative easing? Possibly. But there's a lot going on, man. I mean, the Ebola thing, a lot of flights being canceled already because of Ebola. If this spreads, it's going to slow down the global economy. No question about it. That's part of the issue, right? And another part of it, of course, what's happening in Russia and the Ukraine, very bad. And of course, QE going away, a 5-year bull market. Most bull markets last 4 years. This has lasted 5.5 years so far. And so you've got to wonder if it's going to turn and go down. Now we have more shorts than longs. We only have 2 long positions. Apple, which here, let me show you something. Get rid of that 10-day. Apple has been valiantly hanging on to its 50-day moving average. I mean, I'll turn that into a 50 so you can see the 50-day moving average. Apple has valiantly been hanging on. And then after the close, Deutsche Bank downgraded Apple and they didn't even have a reason. They just said, well, Apple has no catalyst to make it go higher from here, so we're downgrading it. Now, I wonder if those guys are short. I'll tell you this. If I were short, and if I were Deutsche Bank and I were short, I would say, let's short this market. They probably shorted it, and then the market came roaring back, and they said, we got to do something. I know. Let's downgrade Apple. Apple's the key to the market. We downgrade Apple, we can knock the whole market down. So probably, markets are offered lower in the morning because of that, at least a little bit, right? Interesting plan, but listen, if you're running a hedge fund, that's probably how. Listen, don't put it past people. Okay, I've spent a lot of time in trading rooms, and I've heard a lot of things. So, anyway, we remain with Apple and JCPenney. JCPenney is something that we're thinking of dumping, but I was going to dump JCPenney today, but then the market came roaring back, and I said, no, don't sell it yet. Because this is the one chart that's got me hanging on to this is the Russell 2000 small cap index. Check this out, right? Now, you probably remember we spoke about this death cross a little while ago. Death cross is when the 50-day cuts below the 200-day, right? And since then, it's been all downhill for the Russell. The Russell 2000 is small cap stocks. These are the little guys, the speculative stocks. They're getting thrown out in the trash. But there's one saving grace here, is this line. Whoops, I did not mean to move that line. This line is about 107.40. We bounced huge out of this in February to, I think, to an all-time high. We bounced huge again in May, and here we are again, and lo and behold, we get a little bit underneath that line, and we found buyers, and I see a green candle. I consider this my indicator for the overall stock market, and the stock market is my indicator for the yen. So naturally, look, I hate to root for the bad guys, but if the market goes down, my yen trade probably gets its targets faster. Sorry. But, yeah, I don't know if this is going to be the bounce or the break. At this point, it's the moment of truth, right? You got to let the market decide whether or not it's going to bounce or break. And this is in the process of happening right now. Okay, today, it just barely hung on to that level. Maybe this means there's going to be a big rally from here. Now, if we see a continued bounce out of here, I'm going to buy something. You know what I'm going to buy? I'm going to buy Tesla because I really like this chart. You look at this uptrend and look at the channel. Okay, look at this channel. Right, support. Try to draw this a little bit better. There's your channel for Tesla. And so my plan is buy at support, sell at the upper end of the channel? No, probably not. Buy at support and sell at the middle of the channel, right? We call that reversion to the mean. Nice bounce off of that trend line today for Tesla. And the company actually had some decent news today. So what say you, right? Nice little Tesla setup here. If it breaks, it's a God, I hate it when people say high probability trade. I mean, what the hell does that even mean? But you know what? If you buy it at 250 and you sell it if it breaks 240, then you're not taking much risk. I know that. I know there's a lot more than 10 points worth of upside. If you buy it at 250 and you sell it at the middle of the channel, you're probably getting out at 290. It's like 40 points of upside and 10 points of downside. I like that. The math works for me, okay, on Tesla. So that's the one I've got my eye on to buy. If the market breaks down, I'll be shorting Amazon, which, man, look at that. I mean, it tried to break today. You see that wick under the trend line, and then it just fought its way back and climbed back up. And it's like, all right, but I know you're hanging on by a thread there, Amazon. So I'm thinking long Tesla, short Amazon for our next little entry. And probably going to, and again, JCPenney, I'm not that thrilled with having that as a long right now, so that'll probably get kicked out at some point unless the market rallies here. Other trades that we are in. Why am I still short Kimberly-Clark? Well, no, it's not going against me. It's not going in my favor. If this market goes down, I got to believe Kimberly goes down with it. Lululemon, wow, this was getting hammered today, and it was really coming down and filling this gap. It actually gets down to $40.07, and then the market reversed and it found buyers and it closed up. This was almost down. This almost lost the 40 handle today. I'm thrilled to be short this stock. And what else? Oh, the casinos. This is another one. It's just hanging there. Las Vegas Sands just hanging around, waiting to take the next leg down, and so is Wynn. I might just, I mean, we went half and half on these, and we said we'd add to the shorts if they broke down, but they haven't broken down. So we have a half position in LVS and a half position in Wynn, and you know, I guess we're just gonna have to wait for the market to figure it out. You know, if the Russell 2000, right, chart is IWM, if that breaks that big support level, it's going to be a shorting party. And if it rallies up from here, I'm going to buy some Tesla. So let the market figure it out, right? Don't try to think you're smarter than the market. You and I are not smarter than the market, so we're not going to try to outguess it. Instead, we're not going to try to outguess it. We're not going to try to outrun it. We're not going to chase after it. We're just going to let the market figure it out. Does it want to break down here or does it want to go higher? I guess we're going to know soon. Okay, ladies and gentlemen, thank you very much for listening. I really appreciate your time and attention. Great questions tonight. Keep sending your questions in, by the way, to info@edponzi.com, and I'll speak to you again in just a few days. Thanks, everybody. Have a good day.